Okay, good afternoon, guys. Hope you're well. So yeah, this is the Nasdaq. Let me just put my sound on. Sorry. So yeah, I'm going to be sharing the Nasdaq Platinum Strategy today with you guys. It's just a name that I gave it, just so we can define the two strategies for when you ask me questions, and if you want to decide which one you want to use, you can reference it as the name or whatever you want to reference it. But the basic difference between the two strategies is the risk to reward ratios and the hit rates, according to my backtesting that I've done. Now, obviously, I have also forward tested it and I'm busy forward testing it, but the backtesting data I've been very strict with, and you can again go and backtest it yourself. That is why I share the backtesting software with you guys, for the guys that's interested. So there has been a few guys coming back to me that is busy backtesting now, and it does work proper because you can really be strict with yourself in the back testing. There's a few settings that you change that it's basically like you live trading, just taking a lot more trades in a shorter span of time. So with this strategy, I've gotten about a 30% hit rate. So it doesn't seem like much, but in 5 months, the account grew 109% to 108%. So that's incredible growth. You guys can imagine on a funded $100,000 account, that's a lot of growth. So yeah, but it's obviously not going to always be exactly like that, because what you need to understand as well is the backtesting is only the first part and one part of, before you're going to make money. It's like, and it's much easier to backtest because there's no patience involved. There's no, obviously the risk management and the edge plays out properly, but there is going to be a lot more challenges when you go to the live market, and you need to understand that even when you forward test, there's going to be more challenges. And when you actually use real money and there's real emotions involved, it's going to be new challenges. So it's not that it's like a holy grail thing, and you're going to just make money now. You need to understand that there's going to be other obstacles and challenges ahead. Even if you follow it strictly, it's going to be, there is going to be challenges. So, but this is a proper edge over the market. Like, I'm not kidding. This is a really good edge. This is one of the best edges that I've created myself so far, and I'm basically using smart money concepts, the stuff that we taught you to create the strategy. Now, obviously, you can also use what we've taught you and create your own strategy, but the main thing is you need to go and backtest it, and you need to understand your own edge, and you need to then be able to execute it in the live market. All right, so let's go over this strategy, but this is so far one of my best personally, and I'm going to trade it myself as well, because I'm really looking forward to trading this strategy, just because it's Nasdaq, and Nasdaq is super volatile. So yeah, and your stop loss is obviously bigger than with the currencies on smart money. So yeah, the first step is to analyze the 4 hour time frame. Now, okay, so just another disclaimer: this strategy is a bit more complex than the first one, the 1-to-2 ratio strategy. It is a little bit more complex, but it's not that it's going to be difficult for you. Once you start backtesting it, it's going to get more simple and more simple for you to understand, and you'll know exactly what to look for in the live markets. All right, so the first thing is to go to the 4 hour and analyze the market structure on the 4 hour. So analyze, are we bullish or are we bearish? And that is important, guys, because we need to understand, are we looking for buys or are we looking for sells? Now, I'm going to use the current market conditions. So as you can see, we came up from down here, and it's not going to be the major structure that you're going to analyze, like the bigger structure. You're literally just going to analyze the current structure. So we came from down here, we created a high, we created a higher low, and we created a higher high. Now, this higher low is only confirmed once the new high is created. Okay, so that's market structure 101. That's why, like, we also explained that in the market structure video. So go and check that if you don't understand. This low is only a low because we created a new high. Okay, if we didn't create a new high, this would still be the high, and this won't be the low yet. So this would only be, and then that means this would be the low. Okay, but because we created higher high, higher low, and a new high, this is now the higher low. So we can confirm that the range we are in at this stage is from this low to this high up here. So that means we are bullish. Okay, and it means we are actually in the 50%. So we can use our tool and we can see that we are currently trading below the 50%. So we are looking for buys. Okay, if we traded above the 50%, I'd say we can look for sells. And I'll show you now there was a sell trade today. But personally, I'm looking for buys because I was waiting for it to push into the 50%, and now we are in, and now there should be some change of character on the lower time frame to take buys. But if you're in the premium, you'll look for sells. If you're in the discount, you look for buys, and you would look for sells again if we are breaking structure to the downside as well in the premium and discount zone. So premium buys and discount, you'll look for sells. But for now, we are bullish and we are in the discount, so we are bullish. Okay, so that's going to be our buys for the session. The next step would be to wait for a 5-minute close. Or sorry, I should mark this out like that. Okay. The next step would be mark out your London range. Now, this is going to be the key structure for the strategy and for your session that you're going to trade. The London high and the London low, because there's liquidity above and below the London high and London low, because we're trading the New York session. Okay, so what you want to do is you want to come in, identify the London high and London low. Now you can use this Asia range tool again. So using the Asia range tool, we can see, okay, that here is the high point and here is the low point. Okay, easy stuff. Okay, so that is confirmed. So we know where the high and lows are. Now this is also a super crucial part of it. If we are looking for sells, remember we are now in this zone. When we were up here, we were looking for sells because we were in overbought territory. We were like, the trend on the 4 hour is bullish, but we were in a what do you call it, like a premium zone. So we weren't in a discount. We're in a discount now, so we're looking for buys. But I kind of expected us to push down, and then I'm waiting for the move up. So we are looking for sells. So when we are looking for sells, you want to put your tool, your ray, on the low, but you want to put it on the candle close low. So the low that got formed was this low here, but the candle close was this one. And you want to do that because it's kind of important to understand that we are working with the candle closes to determine the direction for the session. Okay, and then the next step would be to put the whatever opposite direction you have. So we're not looking for buys. So the opposite direction, you'll put it on the wick, because if we get a break or if we get a push up before breaking the low point, if we get a push up into this territory, we're not expecting this to break out. It can, but our bias is bearish, so we're expecting this then to be a liquidity grab. So liquidity grab will always happen above the last price point of the wick. If we want the direction for the session, we want it to close below the certain point. Okay, so this is a very important thing that you need to understand. So if we were looking for buys, this would be on the candle close, and this would have been on the wick. Because if we are looking for buys, we're expecting this to be a liquidity grab and then a push and close above this level. Okay, so that's just an important thing to remember and keep in mind. Where is my annotations now? Okay. So analyze 4 hour, mark out London range that we did. Wait for a 5-minute candle close below or above the London high or London low. That's what I just said previously, is you need to wait for the candle close in your direction. So that means if it's going into the opposite direction, you're not going to wait for a candle close. You'll expect that to be a liquidity grab, and then you're going to take or look for entry in the opposite direction. Okay, so that's also important. So now, let's say we are looking for sells in this session, we would wait for the candle close. If market pushes in the opposite direction, view it as a liquidity grab and wait for a change of character in your favor. So that means we are now looking for our buys, like our sells. Now it pushes into the opposite direction on the 5-minute time frame, and now because it's trading above the zone or the London high, we're expecting sell. So we're waiting for a change of character in the opposite direction to take trades. Okay, so we'll probably then take a trade above here. Basically the same. What I'm doing now is I'm looking for buys. So now I'm waiting for a change of character in the opposite direction. So I'm seeing this whole candle here as a liquidity grab, and I'm waiting for change of character to take the market further upwards. Okay, so that's also an important step. Then if 4-hour structure gets violated in the opposite direction, the trade is invalid. So if I'm looking for buys now, like I am, but our structure level gets violated, and the structure level at this stage is this low point here. If that gets violated, so let's say I don't get any change of character on the 5-minute, and it just keeps on melting, and we basically break the structure level, then the trade is invalid, because obviously then we are bearish, and most likely the session would also be almost coming to an end. So there won't be any trade then. Okay, so that's also a proper step that you need to keep in mind, because again, if we're looking for sales and this structure level up here gets broken, no trade, be invalid. Okay, and always target. So this is really important, because remember, NASDAQ, even though we were in kind of a bearish trend now the last couple of months, even like a year or two since COVID, you need to understand that NASDAQ is mostly trending upwards, because the economy is mostly growing. It's not decaying. Okay, and that's been so for the last